Hi everyone and welcome to SMC Wolf FX, a channel dedicated to Forex education and market reviews. My name is Aman and today I'll be showing you how to effectively use CBDR and IPDA in trading Forex pairs, so stay tuned and I'll simplify this powerful smart money concept and go through a few examples for you all. Before we get into it all, I just want to highlight that this concept works best with USD cross pairs, as the timings used to mark out specific ranges are related to the US markets. Also, please note that I'll be simplifying this concept for you all, so I won't be talking into great detail about CBDR and IPDA, but instead showing you everything you need to know to allow you to begin back testing and forward testing this on your charts from a technical point of view. So what is CBDR? Well, it stands for the Central Bank Dealers Range, an assumed range in price during a assumed time range, where we like to believe that central banks, market makers and institutions are in charge of price, keeping it within a range where we can then use to mark up or down in standard deviation increments to help us with creating a daily bias and potential entry points. In GMT plus 0 time zone, which is the UK time zone, CBDR is marked out from 7 PM to 1 AM. When we mark out the CBDR later on in this video, we also mark out the standard deviations, where one standard deviation is simply the amount of pips of the CBDR range. For example, if your CBDR range is 20 pips, then one standard deviation is also 20 pips. IPDA stands for the Interbank Price Delivery Algorithm. The IPDA range of 5 AM to 7 PM GMT plus 0 is assumed to be the true trading day, as during these hours the markets experience the most amounts of volume related to USD trading pairs. But for the purpose of this video, we'll only be focusing on the price action when IPDA opens up at 5 AM GMT plus 0. IPDA Open can also be referred as the New York Midnight Open. Let's also define the Asian range, as this is also used in determining whether or not CBDR and IPDA should be used to effectively trade the market. We will mark out the Asian range from 1 AM to 5 AM GMT plus 0. Make a note of this somewhere and keep it by your side. This is a checklist to determine ideal sell or buy conditions within the market. The ideal sell profile for London trading session setups would be where CBDR range being a range of consolidation which is less than 40 pips. The Asian session also being a range of consolidation which is also less than 40 pips. IPDA Open at 5 AM GMT plus 0 being bullish for roughly the first few hours in the morning, and as a result price trading up into a 1 to 5 CBDR standard deviation, which would also be in line with other smart money reference points such as order blocks and fair value gaps. It's most effective to use this concept from Tuesday to Thursday, as generally that's where we can see the majority of the weekly volume and accurate price action. And make a note of this somewhere, that when marking out the CBDR range, you want to use the 1 hour chart and only use the highs and the lows of the candle bodies, ignoring the wicks. When marking out the Asian range, mark out the highs and the lows, but this time include the wicks of the candles. And then for the IPDA Open, I like to mark out a horizontal line from the 5 AM opening price on a 15-minute chart. Now that we've covered pretty much everything you need to know about starting to use CBDR and IPDA as a trading reference, let's go through some examples. Here is the 1 hour chart for the pound versus dollar trading pair. As you can see, if we work through the checklist which I mentioned earlier in this video, we've got our CBDR range marked out from 7 PM to 1 AM GMT plus 0, and this range is 22 pips, which is less than the 40 pips as per the checklist and therefore ideal. The Asian range from 1 AM to 5 AM GMT plus 0 is 16 pips, This is good, it is not a large trended range, exactly what we're looking for. IPDA opened at 5 AM GMT plus 0, traded to the upside for the first few hours, and all of this indicates a sell profile, meaning we can start marking out areas of interest in line with standard deviations to look for sell setups. And in this example, price had traded up into a 15-minute order block, which was in line with a standard deviation of 1, where price continued bearish, trading below the previous low. And here is a 15-minute chart for the euro versus dollar, another great example where everything met the ideal criteria to use CBDR and IPDA as trading reference points. Here you can see we had a tight CBDR range of only 8 pips, an Asian range of 21 pips, and then a bullish IPDA opening, all indicating towards a seller profile for this specific pair. As a result, you can see price traded up into a 15-minute order block pre-London, which is in line with a standard deviation of 2, before trading bearish and taking out the previous lows. And that concludes this video. I hope you're now able to go away and test out this concept for yourselves. As always, I'd 100% recommend to backtest and trade a demo account when testing out a new concept. Make sure to like, comment and subscribe, and I'll see you next time.